The Reserve Bank is expected to raise the cash rate in February after delivering 3 cash rate cuts this year. Joining me live now is Deakin University economist Dr. Nataliya Ilyushina. Nataliya, 2025 is almost behind us. Economically, would you say that was a good year or a pretty average year for Australia?
I would say this year was quite a good year with, as you correctly pointed out, 3 rate cuts that we were anticipating to have since 2023. And last year, the cash rate was held steady all year, while the countries like New Zealand, UK, and USA started the going down with their cash rate. Having said that, Reserve Bank finally cut the rate in February earlier this year, following by May and August rate cut, after being satisfied that inflation is within the target band. Having said that, just at the end of the year, inflation ticked up again to 3.8%, leaving us in doubts about what to expect ahead. And another point why I consider this was a good year economically for us, from the international economic environment, we faced quite a turmoil with the Trump tariffs announced earlier this year in April. That created quite a great deal of uncertainty, and some economists worrying about this uncertainty flowing into the Australian economy through China, which didn't happen, luckily, because last moment we managed to negotiate our way to a better deal, just because of the critical minerals war between USA and China, where Australia was lucky enough to offer the critical minerals deal because we host the second largest critical minerals refinery on our soil. So yes, it's we finishing on a high economically. Having said that, next year can bring us anything.
Many people I talk to are still struggling with the cost of living. For those Australians, can they expect it to be a bit easier next year?
So there's lots of indicators that still needs to be considered. As you know, RBA is taking very prudent and weighted steps. However, I don't expect any rate change as early as February, because the data is usually quite noisy after the Boxing Day sales and the holidays. So it's not very prudent to move early on in the year. But I would say that public shouldn't expect any rate cuts next year at all, and there will be a rate rise possibly in the second or third meeting of the year, but I would say not in February.
Inflation, as we know, and cost of living is being driven by high electricity prices. How households are hurting. Why is that? What's contributing to that here?
Of course, the transition to net zero creates a great deal of increasing prices. As we know, electricity prices grew by 36% in a year, which is the main driver of this last inflation spike that we observed. In fact, a Reserve Bank would have been aware that the low inflation was driven by the electricity rebates, and as soon as they been taken off, we were exposed to this harsh truth about the energy prices. Because of net zero and the uncertainty about this transition, there has been low investment in the baseload power, and that's why we're having our coal-fired power plants getting out of order, not supplying so much needed reliable source of electricity, and that fuels into the business uncertainty. And as soon as there is business uncertainty, there is less business investments and hence less production, and that in itself is inflationary too. So when not just electricity prices itself contributing to inflation, but the uncertainty surrounding the net zero transition fuels the low productivity overall in the country. So this needs to be addressed first thing in the next year by the government.
For some, they start the new year with a fresh outlook. Do you have any predictions or advice for 2026?
Well, I would say for those who are lucky enough to buy their property, try to plan for at least one rate rise in your budget. And for those who want to work smarter, not harder, I think it's time for us to start embracing AI in the daily tasks, as we really now facing the fact that AI is here to stay and to help us to work, as I said, smarter, not harder. Other than that, I'd say maybe consider investing in mining, since that critical minerals deals. It sounds like those stocks could last, could maintain the price for and value for a while. And that's pretty much it from me on that matter.
Well, Nataliya, thank you very much for your time. We'll speak to you again soon.
Thanks.